All right, let's talk about something fundamental, the trend line. I know. It's one of the first tools every single trader learns, right? Just a simple line on a chart. But its simplicity is, well, it's deceiving, because as you're about to see, it holds the key to some incredibly effective trading strategies.
But that brings up the big question, doesn't it? If we're all looking at the same charts and using the same simple line, why are some traders just consistently nailing it while so many others are, well, not? It's a super common frustration. But trust me, the answer is probably not what you think. Because look, the secret isn't some complicated indicator or a hidden algorithm you have to buy. No. The real edge, the thing that makes all the difference, comes from how you draw and interpret these lines. And that is exactly what we're going to master in the next few minutes.
Okay, so let's get into it. We're going to build the foundation for what I like to call the trend line trading edge. This is all about turning that simple line into a powerful, clear, and confident framework for every single trade you make.
So what is a trend line, really? At its heart, it's just a visual guide to the market's momentum. It's showing us which way the price is heading and how fast it's getting there. That's absolutely crucial for spotting the main trend, and maybe even more importantly, for getting a heads up when that trend might be running out of steam.
So, first things first, let's break down the two fundamental types of trend lines you're going to see every single day. Think of it like this. An upward or bullish trend line connects a series of higher lows. It acts like a rising floor, kind of bouncing the price higher each time. On the flip side, a downward or bearish trend line connects a series of lower highs. That's like a descending ceiling, pushing the price down. One shows buyers are in control. The other shows sellers are winning. Simple as that.
Okay. Now, this is the part that really separates the pros from the amateurs. We're not just playing connect the dots here. We're going to learn a systematic method for drawing lines that the market genuinely seems to respect. This step is absolutely critical. And the secret sauce to this method, it's all built on one core idea: top-down analysis. The logic is so simple but so powerful. You don't start on your little 5-minute chart. No way. You start high, on the monthly or weekly chart, to get the big picture first. This context is what keeps you from getting faked out by all the short-term market noise. So here's the playbook, step by step. You start high, find that first major pivot point. We'll call it point A. Then you connect it to the most recent valid pivot. That's point B, making sure the price hasn't sliced through it yet. From there, you just work your way down the time frames, weekly, daily, 4-hour, tweaking your line for accuracy and maybe adding some new, steeper lines to capture the more recent action until, bam, you land on your actual trading time frame. All right, so you've drawn these beautiful, precise lines. Now what? How do we actually make money with them? Well, it really boils down to two main strategies. You either trade with the trend or you trade the reversal. Let's break them both down. This slide lays it out perfectly. With the bounce strategy, you're betting the current trend is going to keep on trucking. Price comes down, kisses your trend line, bounces off, and you're looking to ride that wave. With the breakout strategy, you're making the opposite bet. You're saying this trend is done. Price smashes right through your line, signaling that a whole new trend might be started. So let's dig into the bounce. This is your classic bread and butter trend following play. You've identified a strong trend, and you're just patiently waiting for a low-risk spot to jump on board as the price pulls back to your line. But here's what's absolutely crucial: managing the trade. Your entry is right when the price touches that trend line. Your stop loss, you tuck it right on the other side of the line. This is key, because it means if you're wrong, you know it fast, and your loss is tiny. For taking profits, you can either aim for a known resistance level up ahead, or you can trail your stop just below the trend line as it climbs, squeezing every last drop out of the move. Okay, now for my personal favorite, the breakout strategy. This is where you can catch the very beginning of a massive new trend. Yeah, it takes a little more patience, but oh man, the rewards can be absolutely huge when a major trend finally flips. Now pay attention here. The entry happens after the line is clearly broken. You gotta wait for that confirmation. Once it breaks, you get in. Your stop loss goes on the other side of the new little trend line that starts to form in the opposite direction. And just like before, you can take your profit at a key level or just trail your stop and ride that new trend for all it's worth. Theory is great, right? But let's see how this actually plays out in the real world with real money on the line. This is where we put it all together and see the kind of results this methodical approach can really deliver.
And to make this super concrete, we're going to look at a real-life example from the source material, an actual trade that was placed using the exact breakout strategy we just talked about.
$27,600. Let that sink in for a second. This isn't some hypothetical backtest. This is the profit from a single trade, and it shows you the incredible potential of correctly identifying and trading a trendline breakout. So what happened here? There was this long-standing upward trend line on crude oil. It had held for a really long time, and it finally broke. The trade entry was placed right on that break, shorting the market. And the exit? It was planned perfectly at a major, well-defined support level, locking in that incredible profit. It's just a textbook execution of the strategy.
So, to wrap this all up and really help you master this, here are some final pro tips. First, your lines are not set in stone. You have to adjust them as the market gives you new information. Always, always use top-down analysis for context. Use those major support and resistance levels to set realistic profit targets. No more guessing. And when you're starting out, for the love of God, trade small. Build your confidence first. And finally, the golden rule: never risk more than 1 to 2% of your account on any single trade. Solid risk management is everything.
So there you have it. We've gone through the what, the why, and the how. You now have a complete professional framework for drawing and trading trend lines. The only question left is, which trend are you going to catch first? Thanks for tuning in.